The focus of tonight's lecture is really understanding what credit is all about, okay, and how it affects your life on a daily basis. So the handout you have, I'm going to follow that handout and use that as a guide. So the question is, what is a credit rating? I don't know if anybody has checked the credit rating before, what the credit is? Anybody know what the number is by themselves? You don't know. Okay, so the numbers run anywhere from a lousy 300 to I think the highest could be 850. If you're in the 700 ranges, you're pretty good, 750. You know, the time ago when I tried to refinance my house, when times were not as bad as they are today, I didn't have to give one piece of documentation for income verification or anything. The guy says your score is so high that you just do the mortgage without doing anything. Okay, so score is crucial. So the credit rating is going to decide what kind of customer you are, and are you a credit risk? If a bank or the auto companies loan you money, are you in fact probable to get paid to pay back? So that's the idea of a credit rating. That's how to decide whether you're a responsible customer or not. Now, creditors have access to how customers have managed their financial obligations, which means they know by looking at your credit report and your credit score how well you've done over your lifetime in paying back your financial obligations. So if you have an auto loan, are you paying your lease payments on a regular basis? Or have you been late? Credit cards. All of this gets bunched up into a credit score, and that's how they use it to decide whether you have a good credit rating, which means you're meeting your financial obligations, or you have a lousy credit rating and you're not meeting your financial obligations. Now, it just doesn't mean if you have a lousy credit rating that you're not going to get the loan. There are other things involved in who looks at credit ratings. First of all, as we'll mention later on, homeowners insurance. Sometimes when you go out to get a policy for your homeowners, they'll look at your credit rating. And based on your credit rating, they'll charge you a different rate on your homeowner's insurance. So having a bad credit rating can become expensive. And the way to decide again is if you're purchasing a home and you're leasing a car and you're borrowing money for a business loan, are you paying back the way you agreed to pay back originally? And of course, if you have a lower credit rating, the interest rates are going to be higher on these loans. They might give it to you, but instead of giving to you a car loan for 6 or 8%, they say, listen, your credit rating is not so good, we got to bump up the credit rating because our risk is much greater taking this loan. Okay? And what's happening is a trend of late, I don't know how long it is, but employers are starting to look at credit ratings when they hire you. They want to know are you meeting your obligations. If you're not meeting your financial obligations, that might have a reflection on how you're going to do your job. And as a result of that, it might cost you not being able to find a job if you have a low credit rating. So it's important to pay attention to those numbers. Any questions so far? No questions. Okay. What's the difference between you have a question?
What's FICO?
FICO is your credit rating score. Okay. So you know when you apply for these things, they go look at the credit rating. And there are three, as we'll see talk, there are three major credit rating agencies, and sometimes we'll hit all three of them, and depending on how much they want to pay by getting you scores by all these three credit agencies. So what's the difference between a credit report and a credit score? Anybody know?
Credit report tells you everything that you've done. Credit score tells you how well you've done along the...
Very good. So a credit report is a very, very detailed analysis of everything you've done in your financial history, and where you live, and how much money you took out, and what your credit limits are, and everything is there. So somebody gets a credit report on you, they have your financial dossier of everything you did in your entire life, or at least up to the last 7 years, and if you went bankrupt, even back to 10 years. So a credit report will show you detail by detail of what's going on in this person's financial history. Whereas a credit score is everything lumped up together into one little piece of information where they can take that number and do it. Okay? Now it's important. The law was passed a while ago. Everybody can get a credit report on themselves once a year. Okay? For free. You can get it as many times as you want. You have to pay for it. But once a year, you can go and get it. At the bottom of this page, you'll see the last things, annualcreditreport.com. You can go to that website, and you can get an annual credit report of your information. I suggest if you haven't done it, do it. Print it out. Look at it carefully. Learn what it means. Okay? For a number of reasons. Sometimes there's wrong information on that document. Okay? I'm going to go to a closing on a house, for example, and you sit down at the very closing, and the guy says to you, "Are you Friedman who lives on this and this block? Are you Harari who lives on this and this block?" Because there's outstanding parking tickets. So they go ahead and they look at everything, okay? Of course, if you're not that person, you don't have to worry about it. But if you are that person, then they'll make you pay for that information when you close on the house. It's part of the title company's obligation. So in the credit report, it's important to make sure that, in fact, your credit report information is correct. If it's not correct, you are to write to these three agencies and tell them that this incorrect information. They should reinvestigate and remove it from your credit report. And that will change your credit score, because now that information which is wrong has been removed, and that will change the credit score. So it's important to check that out, at least once a year. Okay? Now,